Okay, there we go. I have that recorder going, so we're ready to go. So once again, guys, you got the chat box at the top right corner of your screen. If you have any questions or if you have something that you'd like to verbally ask, you can click to raise your hand, and I'd be happy to unmute your handset because by default, all handsets are muted due to the fact that that background noise can get very, very busy in a hurry. So, but with all of that said, I'm joined here today by Mr. Nathan Rufty, the man of the hour. Nathan, are you there?
I am here, Chad. Thank you for welcoming me today.
All right, absolutely, absolutely. We're very, very excited to have you here. Now, if you could just say a couple of words real quick, and then, guys, let me know if you can hear Nathan's audio as well. Let me know if he's loud and clear. So do a little chatting there.
Well, I'm excited to present this to loan officers across the United States because I feel we're not focusing on the refis as we once were, and I have always been focusing on refis over the years, even the down market, but purchases are, a good portion of the business, and refis need to be there as well.
Perfect, perfect, absolutely. So well said. So yeah, looks like your audio's coming through loud and clear as well. So just a quick heads up, guys, that these are live Q&A sessions. Now, Nathan and I are going to be doing a lot of chatting back and forth, but we are going to get to as many questions as humanly possible. It's not uncommon to get 400, 500, 600 questions during these sessions, so feel free to type in your question as soon as it pops in your head, because again, we can't answer everything, but we get to these on a first come, first served basis. So if you have a question for me, just kind of address it to me. If you have a question that you want me to ask to Nathan, just address it to Nathan, and I'll be feeding him those questions as we go along. Also, again, you guys, if you've been on my webinars before, you know how this rolls. I love your feedback. So if you like the path that we're going down, or if we're saying something that you want to hear more about, or you feel like it's something that you can use, just type the word BOOM, B-O-O-M, into your chat box there. I'm monitoring the questions, so when I start seeing a lot of booms, I know, okay, great, you guys love this. Let's give you some more, because these are unscripted live sessions, so you kind of help dictate the direction we'll go in. And with that said, let me get your screens active, and we're ready to rock and roll. All right. Let's get this screen going for you. Okay, your screen should now be live. And we're going to talk about refinance loans on demand. So again, Nathan Rufty joining us here, the refi king here lately. But what I want to do here, guys, is chat a little bit about why refinances are such a big deal even in the middle of a purchase market. Because a lot of people say, well, Chad, you're always teaching purchase lead generation. Why is it that you're suddenly chatting with us about refinance lead generation? And I'm sure if you guys want to, feel free to share, why you feel like you want to do more refi loans, and same with you, Nathan. But my own personal take on this is I love the short sales cycle. The fact that, unlike a purchase, this is something that you could have a lead come in on a Monday and have everything in processing and ready to go by the end of the week. In some cases, I've seen some of you guys closing these, in 10 to 14-day cycles from point of origination to point of closing. So what are your thoughts on that, Nathan?
Well, it is a fast paycheck, if you want to call it that way. I like the refinances. It's a break from the purchases, and I'm sure every loan officer can contest to that, is you're just dealing with the homeowner. You're not dealing with transaction coordinators, realtors on both sides, escrows and titles, multiple transaction people involved, assistants. I like the purchases. It's a little break from the refinance, a little break from the purchases because, like you said, Chad, you're just dealing with the homeowner or homeowners if they're married. It's quick, it's easy. Values have been there. It's just been great for the last 2 to 3 months. Absolutely, absolutely, and I really like the repeat business. I don't know about you guys, but I know that I've always gotten a lot of what I call serial refinancers. These are these people that come in and they maybe pull some cash out, to quote unquote pay off debt, and the next thing you know, you see them again same time next year. They need that cash out again. They're refinancing again, and you get a lot of that in the refinance world, and you can get some very reliable repeat business. So again, just another big benefit. Lots of sub-niches
to target. We'll be chatting about that, and Nathan, some of the niches that you've been targeting with great results. The speed of underwriting and turnaround. I like how quickly you can get from point of origination to point of closing, and then having that diversity of income. Like you said, Nathan, it's a break from purchases, but also the fact that you're not putting all your eggs in one basket. You know, you have your purchase business and you have your refinance business coming in, and refinances I've always found are pretty darn easy to get referrals from, just so long as you're asking.
Yeah, you need to ask. That's the key, Chad. You got to ask.
Absolutely, absolutely. But then with every positive, you have the negative. So in the refinance world, here's the brick walls. A lot of loan officers find them difficult to target. You know, how do you identify the folks that are good candidates for refinancing outside of something like trigger leads? It can be a streaky market. You have those ups and downs, ups and downs, ups and downs. You know, there's no denying that you have hot and cold months, and in some cases, you know, entire quarters or entire years where refinances seem to be on a downward trend. But I believe I saw a number the other day stating that they're predicting, maybe you've seen the same thing, Nathan, somewhere around close to $500 billion in refinances for 2015?
Estimated $457 billion for 2015.
Beautiful, beautiful. So $457 billion in refinances estimated for 2015. So I don't know about you guys, but that's something to look forward to. It can be expensive to target, especially if you're doing things like bulk direct mail. You have lots of competition, especially in the forms of big banks. It can be very time-consuming, and a lot of the traditional methods just really don't work. So if you guys want to help me and Nathan out here, let me know in the chat box. What have been your challenges in targeting and getting business in the refinance market? What's been that big roadblock or hurdle for you? And I threw a last one in here real quick, skeptical. A lot of these borrowers can be skeptical right out of the gate just because of the bad rap that the mortgage industry's gotten over the past decade. So a lot of these folks are just questioning right out of the gate everything that comes out of your mouth. So sometimes it's a little bit of an uphill battle. Okay. So while I see some questions coming over there, or some comments coming over there, and I'll get to those in just a moment, but let's talk a little bit about you now, Nathan, and what you've been doing and how you've cracked the refinance market this year. Now, I just want to introduce you guys to Nathan. Nathan, you've been in the business for, what, just about 25 years now?
Since 1988. Long time. A long time. I was
beautiful.
Underwritten loans, process loans, open loans, originate loans, owned my own mortgage company, broker shop back in the heyday of 05, 06, and 07. But in then, Chad, I was a refinance loan officer in 05, 06, 07. I barely knew how to handle a purchase back in 05, 06, and 07. It was just, I just focused on refis. That's all I did. It was a good business back then, and then obviously we all know that the market kind of turned on us. But I was still doing refinances during that time of 08 and 09 and 10, and then still continue to do the refinances today. But I don't put my eggs all in one basket with purchases and or refinances, because we all can feel the effects when the market does turn in one way or the other.
Right, exactly. You never know. Sometimes you're in a purchase market, sometimes you're in a refi market, but having something to fall back on is really, really nice. Now I know you've been consistently a top producer, and I listed you here as a serial implementer, and that's just because, you know, every time we're chatting and you know, we're talking about taking action. Next time I chat with you, it seems that like you've already done it. You've already taken the action on whatever it was that we were discussing, and that plays a big role in you know, success versus, you know, just average or mediocre results. But why don't you tell us a little bit about some of the struggles that you faced once the market started shifting, and what got you to, you know, the point where you're at, you know, boom, you know, I'm hammering out eight refi loans every single month. What changed, and what led up to that?
I felt it back in late 2013 when obviously our loan amounts here in California changed. They went down. FHA changed our loan limits in California. They went down. Home prices started to go up a little bit at the beginning of the year. And I had a little over 50 pre-approvals out on the streets of buyers looking for homes, Chad, and I was still doing refinances, but the purchase money started drying up a little bit because my buyers started, well, we're going to wait, and I'm sure a lot of loan officers on the call felt the same effect, that their purchase money started going away because their buyers went away. And then I would interview some realtors and see if they had the same effect I was feeling of the purchase buyers taking back seat. They were waiting to see what the market was going to do, what the rates were going to do, and they were having the same struggles I was, is that there wasn't enough buyers on there out looking for homes. So I saw it coming, and at the beginning of January of 2014, I had to think, well, let's dive into the refinance real heavily, because the value started going up. The rates were still fairly good. They're better today than they were a year ago. So I'm liking that. So I said I got to do something. If this is the trend of my buyers leaving the market or not coming to the market, I got to get income. And the way it is you got to ramp up one side of the business, which we do purchases or we do refinances. So I started testing the refinance market at the beginning of the year.
Beautiful, beautiful. Now,
I think you said it, Chad, that we're not good marketers, we're good testers. We got to test what works and what doesn't work. And it took me a good 6 months to find out what works and what doesn't work, and to start getting that 8 closings a month that I've been feeling the last couple of months.
Right, absolutely. And we're about to get to that, and what methods you were using to get to those 8 closings a month. So what I'd like to do is just talk a little bit about what is needed. You know, if you're looking at ramping up a good refi strategy, you know, what are all the pieces of the puzzle that need to be there? And you know, number one, and feel free to agree or disagree on any of these or add to it, but having a definitive target, because I talk to a lot of loan officers that say, well, you know, just anybody willing to do a loan, or just anybody that needs to refinance, or anybody that needs to, you know, my services, that's who my ideal client is. And that's just
bad approach.
That's just such a vague. Absolutely, it's just far too vague, because you know, if you have a $100,000 a month advertising budget, you know, great, more power to you. You know, go out and get it. But if you're looking at spending as little cash as possible and maximizing return, and you cannot compete with the big banks from an advertising standpoint, then you need to have a very specific target. So a definitive target, and then readily available data. You need the data to know, who are these people, where are they residing, what neighborhoods are they in, you know, what's their income like, et cetera, et cetera. You know, you need that access to that information to know how to get in touch with these folks, and then a means of getting their attention and a strong call to action. So we're looking at you know, just pretty much the same pieces of the puzzle that you need even when you're going after the purchase market. So not much has changed there. But on top of that, I'd like to throw out there a need to mitigate risk to these prospects, because again, you know, the mortgage industry has gotten a bit of a bad rap over the past 10 years, and people are very, very skeptical. So how do you mitigate the risk to them so that it becomes painless, or at least you minimize that pain of getting in touch with you and chatting with you about doing a refinance? You know, how do we remove those barriers? So that's what I see that needs to be present. Now, why don't you talk a little bit about some of the targets that you decided to go after towards the beginning of this year when you first started testing and starting to see those great results? Who were you going after?
The biggest target I was going after was since FHA implemented that life of the loan with the MI June 3rd of last year, I started targeting those individuals because of the increase in values, Chad. That was an easy hook to say, hey, listen, you know that mortgage insurance is going to be through the life of your loan. You need to refinance out of that, paying $200, $300 a month, at least here in California. That's heavy on somebody, $200 and $300 a month just in mortgage insurance. So if I can eliminate that, that was my first target of individuals, were the FHAs after June 3rd of 2013, because of that MI stays to the life of the loan.
Excellent, excellent. Now, were there any niche markets that you kind of played around in that you just kind of felt, oh, you know, that's not going to cut it, or that weren't a good target? Anything that should be avoided?
Well, we finally, and you got to work with your company. Our company just the other day, actually, with the VA IRRRLs, I messed around with those, and those are great results. But we were not able to refinance, do an IRRRL, a streamline, if it wasn't originated or serviced by our company. So if they originated with the Wells Fargo or another competitor and wanted to do an IRRRL, I could not service them because that wasn't what our company was doing. Now we just open that up, so that is a huge market for me, and I love IRRRLs. They were just the easiest refinance loan out there is the IRRRL. But the biggest one is I was getting a little fancy with rates over 4.5. I was getting adjustable rate people and combo loans. I mean, I tried everything, Chad, and for the beginning, first half of the year, I just tried everything that I could to make it work. And like you said, you got to test what, and I feel breakout at the end of the summer. I mean, what I've done and what I've gathered over that couple of months, it blew up in September and had great closings in September, October, and now November, and rolling into December.
What do you have in the pipeline ready to close for this month and next month?
Well, I'm funded out for October, and that's a good thing. I funded out on Friday, funded everything out, and did 13 loans, and out of those 13, 11 of them were refinances. So I'm excited about that. But some of those came off my database, but the 8 of those fundings this month came from the mailer. So rolling into December, I'm just waiting for December 1st to come around to draw our loan docs so they have a February 1st payment. So I got 4 of those just waiting for next week to draw loan docs. And then I should end up around 8 as well next month.
Beautiful. Now, what I find funny about that, or intriguing about that, is so many people say how horrible December is, and November, December, that really no action's taking place, because you're dead heat into the holiday season by that point. So, having eight refinance closings in the month of December, that's absolutely fantastic. So. That's wonderful and pretty darn inspiring. So I do see some questions coming over, and I'll pose these to you once we finish the primary presentation. But I see some individuals asking questions about the niches. What is a VA IRRRL? How are you targeting these FHA? Et cetera, et cetera. How are you finding these folks? So we'll get into that here. Actually, very, very soon, guys. So just to let you know, I'm not ignoring your questions, but we're like dead heat about to get into those exact topics. So we're going to talk about targeting and how you are picking your targets and what's needed. A lot of folks I've just seen, chatting with so many loan officers, a lot of individuals don't really know who their ideal client is or who their ideal prospect is. They're just kind of taking that shotgun approach to their marketing, and same thing when it comes to their troubles. What are the challenges that's faced by your potential market? I've seen this practice it's not just the mortgage industry, it's pretty much any sales industry, where folks will just look at what everybody else is doing and go, oh, well, since everybody else is doing this, I'm assuming it's working. So I'm just going to kind of copy this and do it too, because if it wasn't working, they wouldn't be doing it. But the problem is once everybody starts doing that, then it's just this, blind leading the blind, so to speak, and that everybody's thinking that, hey, the other person must know what they're doing or must have already tested this, so I'm just going to do that as well. I prefer, like you said, to be a professional tester. By testing it out, guys, we find out, what's really working. And let everybody else copy off of each other, and at that point they kind of blend into the background and start looking and sounding and smelling like everyone else. But when you actually find out what the biggest challenges and concerns are of your target market, instead of guessing, not assuming, you're going to find that picking the right target becomes very, very simple and very straightforward. But even when we know that.
And also, Chad, we got to, the loan, we got to target our database and our past clients. And just to let you know what I did in 2012, I did 52 refinances in 2012 and 36 in 13, and I'm already at 57 refinances just for this year, or 2014. Mm-hmm. So, and that's always targeting, doing some other kind of mailings, and also targeting other avenues to get business. I don't go after divorce attorneys and CPAs and stuff like that. And maybe I should, but I mean, I'm cranking out a lot of loans. I don't have, only can be stretched thin so far. But
right.
Trying to tackle a divorce attorney, a CPA to help with a refinance. I mean, if you get one good one, great. But they're like targeting realtors as well. It's hard to break into that niche trying to get that business. So the direct mail piece, for me, it has worked. It worked in 05, 06, and 07 when I lived on it, and it's been working for me this entire year. And the breakout has been obviously the fourth quarter.
Absolutely, absolutely, beautiful, beautiful. So basically, you found a way to reach your target market.
Yes.
And I'm assuming that you track your conversion numbers and you track your metrics and statistics. Since you're rattling them off, I'm assuming that you have a means of tracking to see how well each of your campaigns is doing and what's worth doing and what's not.
You got to track that money. If you don't, like you said earlier, you just continue to do the same old thing and not track it and find out where it's coming from. Penny for penny. I mean, dollar for dollar is nothing. This is costing me nothing. It's to get these calls to come in. Nothing.
Right. Right. Absolutely. Absolutely. So let's talk about this here a little more directly. I want to talk about the data. Now, you've done some really cool things when it comes to capturing or getting access to the data to target, like you said, even, FHA and some of these other niches. Data is going to make or break your campaign. So what are some of the things that you were testing and that you found were extremely effective in getting the information that you needed in order to speak to the right prospects?
I go to a site here locally in California where I can pull zip codes and find out who has the per zip code now. I don't even have to pick the city of Rancho Cucamonga. I can pick the 5 zip codes we have here and melt to 3 out of the 5 that have value that I've tracked through a website. I can get lender specific. I can get loan amount specific. I can get rates, surnames. No tax defaults and NODs, and that's huge. When I know how to present the data, Chad, where you cannot ask for just data and then you might get an NOD filed or you might get a tax default. You don't want those because you're just wasting your mailings to them in dollars. So you got to make sure you have the right data. So I do have a data house. There's a couple that I use. One in particularly that I did speak with them about. But it's how you pick that data is the key, like you're talking about. Data is everything, and if you know how to pick it the right time, the right metrics of it, you're going to get what you want and mail it out. And the dollar for that mail piece is going to go down per cost because you're going to get the return, which is a phone call.
Well, let's get some examples here. What sort of data? Let's say that I wanted to go after. Like you said. Let's say I'm targeting FHA. What's some examples of some filters or some things that I'd be looking for, some red flags that would say, hey, these people would make a good prospect?
The date's the biggest one. I mean, because you can make that letter as of June 3rd saying, hey, your mortgage insurance is going to be through the life of the loan. So you can really tailor that letter to that individual that will prompt that phone call. But I try not to go with the lower loan amounts because that individual or that particular property may not have the biggest increase on value, so I can't do much for that one. So I've noticed that. So I'm ranging my loan amounts to what my county loan limits are on the 4 counties that I target here in California. So I'm not a jumbo refinance person. I just can't compete that. So I stay at my county loan limit or below. So I do filter that way. I filter locations, Chad, and the proximity to your office is key. I mean, I can go to San Francisco and knock out $700,000 loan amounts all day, but why would anybody from San Francisco call me in Southern California? So gotcha. I'm not going to waste my dollars mailing up there. I probably could test it and see what I get, but the individuals that have been calling me have called me because they said that I am local, and that is key too, is being local to them. I'm not going to mail to San Diego. There's a million loan people between San Diego and myself.
Right.
So local data. I stay within a local market so people can drive to me, or they feel if they have a problem, they can drive to me. If it's from LA, Los Angeles, they can scan or fax or email to me, or I meet them at my office that they like to meet face to face. Also.
So I've been asked probably about 30 times now just in the past 2 or 3 minutes. Everybody wants to know, and is commenting that, hey, direct mail is expensive. How much are you spending, to get your 8 closings a month, et cetera, et cetera. Why don't you do direct mail a bit differently than I think a lot of people are thinking? Why don't you describe how many direct mail pieces go out on a typical week for you?
I send about, I go to Office Depot and buy the envelopes. I don't do the bulk mail. That is way expensive because that's what I did in '05, and I tested that and it did not get the results. So I stamp the envelopes, I handwrite the envelopes, I do a pre-prepared letter, and I handwrite my signature on that letter. I throw a business card in there. In a 500 box, and I gauge everything on that 500 envelope box, Chad, from Office Depot, and the letters and the stamps and the business card, it's under $300 to send that whole box out for me. And I stay in the local market, so I try to shoot about a box a week, just for me.
Okay. Okay. So you have somewhere around 500 mail pieces going out for the entire week.
For the entire week, yes, sir.
Okay.
Yeah.
And what would be typical results from sending out? Let's say I'm new and I'm a little nervous and going, you know, I don't want to spend a whole lot of money until I know that I'm going to earn my money back and then some. What could I expect from just sending out just 1 week for the entire month? What would be your expectation?
At the beginning of the year, I was hoping to get 10 phone calls at the beginning of the year, because that's when I was testing what works and what doesn't work. And I was getting about 5 to 8 and closing about 1 per 100 mail pieces. Then I started fine-tuning it, and then, as you can see, to get 8 closings, we all know how many people we got to talk to, how many we got to pre-qual, what do we got to get to 8 closings a month. This is a lot. But I started fine-tuning my data, fine-tuning my mail piece, and my call volume started going up. And it was getting insane. My phone would not stop ringing. It didn't matter what day it was. It just rang. So from that 100 mail piece, I started getting 20 phone calls per 100 because I fine-tuned it. Now, I was hoping to fund, about 5 per 100. That wasn't the case. I got about 3 for every 100 mail pieces, which is still great.
Right, right. And from what my understanding, what you're mentioning earlier, you don't mail every single week, do you? You mail kind of on a more as-needed basis? Wait.
Yes, because the phone calls, the phone calls just kept coming. I'm slowing down now because it is the holidays. I was slowing down from about 100 a week, maybe to about 50 a week, for testing it for the holidays. And our consumers on holiday mode. But at the beginning of the year, I think that's going to change, as you and I discussed. I think people are going to want to dive into refinances. But I got a lot of people call me at the beginning of the year from the mail pieces. I am still getting residual phone calls from people that I mailed out 2 and 3 months ago. I'm still getting phone calls from them because I put a business card in the envelope, where before they're just going to throw your letter away. They have something to keep now, which is the business card. Okay,
so then from what I'm hearing you're saying is you're not, at this point, back in the testing you were mailing a much higher volume, but now you're content to send 50 or 100 mail pieces for the week, and that's about all you can handle as far as phone calls that are going to flow in as a result of sending that 50 to 100 mail pieces for the week, right?
Correct. I'm not sending much now because of the holidays, but the beginning of the year, I'm gonna ramp it back up, because now my company will allow us to do the VA streamlines from other companies. So that's huge right there for me. Now I have another niche market to go after. Okay, beautiful, beautiful. So, no, I absolutely love it. Now, do you have any specific mail houses or any sources for data that somebody might be willing, might want to look into, that you've had either good success with or that has reputable data? Because I know, there's good data providers out there and there's crappy data providers. I know we've all wasted money on the garbage. So, is there any recommendations you can make, either specific sources, or I don't want to be too much prying here and have you give away all your secrets, or how would I, gauge the good from the bad and keep myself from getting burnt on a good data source? Well, I've tested data sources as well, and there's 2 that I have looked into, and I don't know if you and I talked about Haynes and Company. They're limited on the states. They do California, so for the data that they provide, for the cost is not bad at all, but they don't do Texas, they don't do Idaho. They are limited to about 10 states is all that they provide data to. But if you're in one of the 10 states, that's a great source as well. But the other one is I do have an account executive at Black Knight Financial by the name of Ralph, and he's been our main point of contact for data at this point, and he's said that he will do a discount for the people that sign up with us. Oh, beautiful, beautiful. Yeah. So you've used Haynes, and I can vouch for Haynes too, because I used that for the longest time, actually both for purchase and refi. Oh yeah. So yeah, Haynes is one heck of a resource. But yeah, you're right. They're not in every state, so that's the challenge, because I've originated in multiple states, and sometimes
I've hit those markets where I just couldn't use Haynes. So
Yeah.
and then Black Knight Financial. That sounds awesome. So basically, then what would I? Is there any trick to figuring out if a specific provider or company has good data? Is there any questions that you ask or anything that you look for that says, hey, these guys are great, or alternatively, hey, run the other way screaming from these guys?
We've tried a couple other mail houses. It boils down to customer service because they get all the same data through the same providers. Black Knight just seemed to be the best one with Ralph. Seemed to be the best data because we tested it and his worked great, and that's who we stuck with to this day, and we continue to use him as well for the data that we get. You just got to make sure you pick the right data, and Ralph's great on helping you pick the right data. And I know, through the testing process what to do and what not to do. Like, don't make sure when you do your data specifically say no tax defaults or NOD filings, because you will get those, but you got to specifically say don't give me those two items, tax defaults and NODs. You don't want to mail to those people because they're hurting right now, so you can't refinance it probably anyways.
Everybody writing that down? So good advice. Good advice. Why waste money and pay for data that is just you're not going to get anything out of it?
Yeah.
So okay. So basically, then the signals we've already covered that. You mentioned what you're looking for when you're pulling data, and then one of the things that I like to look for, guys, when I'm considering either a data source or deciding what my mailing is going to be about is, do I have the capability, or does that data house have the capability to give me information or data where I can tap into multiple niches? And here's why. Because, and I'm sure you can vouch for this, Nathan, you can't saturate your market. If you just keep mailing and pounding the same people again and again and again and again and again and again, at some point you're going to see those diminishing returns. So what I like to do,
I've never mailed the same data twice. Never.
Absolutely. Exactly. It's that diminishing return. So I like to rotate and either pull new data or select a completely different niche for, let's say, if I'm at the beginning of the month, I'm doing one particular mail piece, and then the end of the month or next month I'm doing another. I'm going to find a different niche, so I'm rotating and always have that fresh blood coming in.
Absolutely.
Because the impact, it's that impact of when they first get that mailer where you're going to see that biggest bang for your buck, where you're going to get the highest level of response. And like you said, your phone ringing to the point where it's difficult to keep up with, that's a wonderful problem to have. But if you're saturating your market, you're not going to have that problem for long. So it's rotating and tapping into multiple niches. So we'll be talking about that here very shortly as well. Let's talk about how you got your piece open, because basically now you're just sending 50 to 100 pieces of mail. That's it. We're not talking expensive bulk mailing. We're talking 50 to 100 mailers for the entire week, and in some cases that'll cover you for several weeks. So the first thing is you got to be stealthy, guys, and get under that what I call the BS radar, and that's where people, how do you go through your mail? Kind of stand over the trash can and junk mail, and you're tossing it straight into the trash can. We don't want to fall in that junk mail category. So why don't you talk a little bit about what you did with your mail piece to actually get it opened?
Well, at the end of last year, I was mailing to bulk mail, and that wasn't getting any return. So as I tested through this year, at the beginning of the year, all I did was buy the number 10 envelopes, mail merged my letter. I hand signed the letter. I stuck it in an envelope. We hand wrote the envelope to that homeowner. I bought a stamp at Vistaprint that had my address, return address, so I stamped every single one. I didn't go out and spend, Chad, a whole heck of a lot of money. I did get pre-printed envelopes. Why do that? It's going to go in the trash. But I didn't have the time to handwrite a return envelope just in case it came back to me. So I went to Vistaprint, $15, and bought a return stamper, and that's how I stamped all my envelopes. I hand wrote the address to the homeowner, and I put a physical stamp on there, and I threw a business card in the envelope. And also too, on the back of my business card, if the back of your card is not, it's free real estate on your business card. If you don't have anything on the back of that, you gotta put something there. I have a QR code, Chad, on the back of my business card that people can scan, and it's lender app that they configure mortgage payments. It's Nathan Ruffey lender app. So it's on the back of that. They scan it. So they fill that in the envelope, and they're going to open my envelope and feel what's in there, and they're going to open it up because it's handwritten. and everybody, not everybody, but a good portion of people that call me state that I opened yours because it was handwritten, you signed it, you put a business card in, and I was local, and that's why I got a good return on an open rate.
Beautiful, beautiful. Well, I like that you've done a couple of things there, and what I like is that a lot of this stuff is just good old-fashioned marketing know-how. Number one, we can't seem overly commercial, and when you have those, pre-stamped, meter mailed type envelopes, everybody knows that's junk mail right out of the gate. So it gets cost. So you're actually putting a physical stamp on it. You're basically stamping the return address, and now you said though for their address, you're handwriting their address.
Correct. We're handwriting the homeowner's address, going straight to them. Yeah, and it takes a little time to do it, but for the return on investment, it's huge. I mean, Chad, we haven't said numbers yet, but in October, 8 loans at almost $1.9 million in October. November, 8 loans as well for almost $1.9 million. Now, I don't know what everybody's pay structure is, but imagine if you just increased $1 million a month on a refinance, how much would your pay increase for the return on investment? It's huge.
Absolutely. Now, here's a good question. Lori's asking, are you putting the company name on your return envelope, on the return address, or is it just the address, or is it the address plus your company name?
It's my company name with the logo. I definitely want to stay in compliance, but it has my company name and my return address, and yeah, it doesn't have Nathan Ruffty on the return address or anything like that. I want my mail piece to get open, and that's what I found to be the best to get open rate.
Right, right. Excellent, excellent. And now you mentioned earlier, because I see Martha's asking now, when you're sending out your mailing to the database, you're not sending it more than once to the same people, right? It's
correct.
It's basically you send, and then boom, it's going to a new group next week.
Absolutely, because they might sell the property, they might refinance it with somebody else. It's hitting them at the right time, and you just got to mail them.
Absolutely. And since you're sending such small quantities of mail, it's not as if you're herding for new addresses to mail to. Since you're just sending 50 to 100 pieces. Right. Okay, beautiful. Beautiful. So basically you put some things into the envelope to add to the intrigue. So basically they're seeing, this nice handwritten, their name, their address, physical stamp on there. And then you have something basically kind of rolling around in there, your business card, and then on the back of that you have your QR code that's connected to a mortgage app, which is I like that, because then if they download that app, if they use that QR code or just go and download that app, now you just basically bought real estate on their smartphone.
Absolutely, and the lender app, they're creating some good stuff that you can push notifications out with that device as well.
Awesome, awesome. Yeah, that's beautiful. So you got the intrigue part taken care of. So you're balancing between being stealthy, but also getting their attention, and then you've personalized it, because you said that you're actually basically signing every single mail piece. Basically, you're
every single mail piece, every single one of them.
Beautiful, beautiful. No, I love that, absolutely. So it's personalized. And I'm just going to throw a couple things out there, guys, in my own personal experience as well. Now, I've hit a lot of different niche markets, so this, some of this applies to purchase, some of this applies to when I was mailing to FSBOs or realtors, some of it directly to refis. But some of the things that I like to test as well, guys, is what we call lumpy mail, which Nathan's kind of doing that a little bit with the fact that you put something in there like your card or something that kind of shakes around when they pick up that envelope. But what lumpy mail is when you're putting something in there like a pen or something that makes them want to open it because they see something that's lumpy in there, and it's that mystery. Hey, I got to open it to see what this is. So we've tested lumpy mail in the past to good effect. Sometimes we use kind of the bubble mailings in the manila bubble packs, kind of like what you would send out to get docs in. People can't help but open that because it looks like a shipment or something very, very important. I use that a lot with realtors, by the way. The rush envelopes, I don't think they work as well today as they used to, but we did use those in the past to good effect. So I'm just kind of throwing that out there to get your creative juices going. And then for FSBOs and realtors, we use mailing tubes, actual cardboard tubes, to get them to open and get that direct response going. So just a couple ideas. I want you guys getting those creative juices going with all this awesome information Nathan's sharing. But now let's talk about sending times, Nathan, because you had a very specific schedule for your sendings. Can you tell us a little bit more about that? When are you sending, what time, and all that good stuff?
I tested every single day, but it felt more if I send them out on a Saturday or Monday, individuals will call because they're home watching TV more, listening to the radio more, and they hear about the rates, they hear about housing market, they hear everything about the mortgage or the real estate industry. So I mailed them out on Saturday so they will get their mail on Monday and Tuesday. And we know a lot of people probably don't check their mail maybe once or twice a week. So if it gets there on Tuesday, Wednesday, I'm excited because I have that opportunity to speak with them that week and maybe meet with them that weekend. But I was mailing every single day, Chad, and like I said earlier, my phone would not stop. But if you don't want to get phone calls on the weekend, because the key about any sales is you got to answer the phone. You can't help a customer if they call at 8 o'clock at night. I mean, if it goes to voicemail, it's going to voicemail. But you like for them to call when they get home, open it up early in the week because of what they heard over the weekend. Because during the week, they're thinking about the weekend, like Thursday and Friday. They're thinking about Saturday and Sunday. They're not going to think about a refinance or anything like that. So earlier in the week is the better. So send them out Friday, Saturday, and a Monday would be the best time to do the mail piece.
Okay, so you're basically timing your mailings to make sure that they arrive towards the beginning of the week, so that way you're not interfering with their weekend and you're not getting a bunch of phone calls during a time frame where you're not going to be able to man the phone, so to speak.
Correct, because if they call on Saturday and Sunday, I mean, the likelihood of me picking up the phone's 50-50 on a Saturday or Sunday, and we need to answer the phone, and we need every opportunity to test when that comes in, and I've tested it, and it's mailing on Friday, Saturday, or Monday. The best time to mail it.
Awesome. No, that's wonderful information. Now, I think we're getting a little bit of an echo. I don't know if maybe that's your, maybe either you have a computer or PC. The audio, I think, is kind of bouncing back a little bit, or they said it's only when I'm talking. So just had a couple people comment on that. So, okay, so we got a couple other questions coming over here, and I'll get to those here in just a moment. So let's talk about the call to action. So one of the most important things when it comes to a direct mail piece and just marketing in general, guys, is the call to action. What's making that person want to pick up the phone and call you? So you need something that's very benefits driven, and I know that just from personal experience and doing a lot of direct mail myself, just talking about the basics. Oh, save money or click here. Now's a great time to refinance. That's the sort of thing that just doesn't work. So could you share a couple ideas with us on some of the things that you've done in your mailers that are getting these people to actually pick up the phone and want to talk to you?
Well, the one big thing I've noticed is you got to find, obviously, the pain, and the pain is writing a mortgage payment that they don't need to write every single month. So my biggest one was the FHA to get rid of that mortgage insurance. And a lot of people, too, with the letter that I send, I give them options. Options on, hey, do you want to reduce the term of your loan, pay it off earlier from a 30 down to a 20 or a 15? Do you want cash out to do some home improvement? You're a new homeowner. Now that you got equity, you can do some home improvement. A lot of people may have gotten themselves in a little bit of a debt issue, so I hit that pain as well, like pay off some bills with the freed up equity. So I try to, in that one letter, try to address all the needs, which is remove the mortgage insurance, lower your overall monthly mortgage payment, take cash out to do home improvements, paying bills off. I don't get into buying a car or college tuition or anything else like that, because that's been beat up on the previous refinance back in 05 and 06. So I try to find their need, and their need is to lower that overall monthly payment. And Chad, with the FHA, has been huge, because if you can get rid of that mortgage insurance and keep the payment exactly the same, but give them cash and keep the payment the same to pay bills off or do home improvements, they're used to paying that mortgage payment. So that's how, you want to talk to them and you want to present them with options. And I give them at least 4 different options on, hey, let me see your mortgage payment, your statement. Let me present you with some options, and then we can take it from there. And once you see that, the emails I send over to them, I mean, they pick one of the 4.
Right.
I try to find their need.
So you're not relying on just one little call to action. You're kind of stacking some benefits so that you're creating an irresistible offer. That's brilliant. Now, on top of that, talk about awesome timing. I don't know about your own personal experience, but mine, January is, when you're talking refi business, January was always my best month because you have that buyer's remorse from people who overdid it on Christmas, and now they're actually starting to get hit with those bills. They're unusually receptive to the idea of, either having that capability to skip a payment or reduce their monthly payment or reduce debt, consolidate. I mean, all of these things just resonate and are more real to them because, hey, they just blew, thousands and thousands of dollars on gifts, and now it's time to pay the piper, so to speak. So.
Absolutely. And January is a good kickoff, beginning of the year, and that's, I'm not the only loan officer that hears it during the holiday times with even refinance people and buyers is, we're going to do this after the holidays. Call us at the beginning of the year. I mean, I hear it every year for the last 25 years I've been doing this. Right,
exactly. So now they're kind of in that goal-oriented, and you basically have about a month to take advantage of that when people are actually serious about, I'm going to do this, I'm going to do that, and, all these things that they've been putting off, they're finally taking action on. So you have that desperation that comes from seeing all these massive bills, arrive in the mail, and then suddenly you get a potential lifeline, which happens to be your letter. I think you're going to kind of hit a note there, so to speak. So perfect timing. It's risk mitigation. So one of the things that I found personally in my own direct mail, and you can maybe speak as to what you do in your direct mail, but one of the things that we always did was we try to take away the things that we knew people were worried about. And one of the big things was always, well, I don't want to talk to a loan officer because I'm afraid, he's going to hound me and, on the phone repeatedly, and I'm obligated, and he's going to want, my Social Security number right out of the gate. I don't know who he is yet, so I'm not comfortable with that. You have all of these things that they're worried about. Oh, am I going to have to pay for an appraisal? So in my direct mail piece, I didn't just list the benefits, but I would also list, here's the things that you're not going to have to do. So we remove those mental blocks, those mental barriers that stop them from picking up the phone. We mitigate that risk. Oh, by the way, I'm not going to ask you for your Social Security number when we first call. Oh, by the way, you're not obligated to anything. I'm not going to ask you to drop money on an appraisal the first time we talk. Basically all we're going to do is show you what you can do. And if you don't feel that this was worth your time, let me know, and you'll never hear from me again. I'm not the person that's going to be chasing you because I have a long line of other people that need my services and need my help.
Absolutely. So, I don't chase them either, Chad. It's, you're going to call. I don't call these people after I mail them. They call me, and the biggest thing I want to do is I just want to talk to them. I don't want to sell them. I don't want to pressure them. I just want to talk to them and review their options. And one thing I want to get from them is their mortgage statement, because that mortgage statement tells us a lot about their loan, how much they have in their escrow account, their principal balance, how much is going to principal, interest, the impound if they have it, what their principal balance is, if there's any lates on it. I mean, that mortgage statement tells a lot. And once I get that, then I can start presenting options to them, and that will sway them one way or the other to do a loan or not.
Right, and one of the things that I think a lot of people make the mistake of when it comes to direct mail is they expect that direct mail to do all the selling, and that's not the point of direct mail. That's not there to make them feel like, hey, I'm doing a loan with this guy right now. Rather, the direct mail piece serves one purpose and one purpose only, and that's to intrigue them enough to get them on the phone with you. That's when you become the salesperson. They called you, so you know that interest is pretty significant for them to pick up that phone, so you know you got a good prospect. Now, you have the opportunity to dig deeper and sell them, to find out what their pain is and personalize your message for them. So I've also found that putting a time limit in my direct mail piece was always a very big deal, because otherwise it's that excuse, oh, well, he'll still be there next week. I'll call him next week. I'm too busy this week. But when I put stack my benefits and mitigate risk, and tell them that this, is an expiring offer, that they only have a certain amount of time, to get whatever it is my call to action is, I've seen a significant boost in my production as well. So that time limit, is a big deal to getting people to get off their butts and to actually pick up that phone because of fear of loss. So.
Yes, that's what's in the mail piece is, please respond by this date. so we can miss that mortgage payment. And if I can stagger the phone calls too, I just don't want to leave it open-ended. So I do have it on that mail piece, Chad, to do call in a certain time frame so we can set your loan up to fund on a certain time.
Absolutely, absolutely. And for those of you guys that are kind of getting your creative juices going here, I'm going to throw a couple other things out there that I like to do. And this isn't every single mailer. Okay, this is something that I would test, and like we said, you're professional testers. That's what you want to be. And one of the things that I liked to test was like Nathan's already doing with his actually handwriting the signature and all that good stuff. Is I found that people skim the mailer. So sometimes, depending on the target market. Again, this did not apply to 100% of my mailers. But what I found was that I would either add little arrows pointing at specific points that I wanted to make sure that if they're skimming, they at least read this. And when you put a little handwritten arrow in there, or what we would call scribbles, or underline something, or put it in bold, what I found was that they would pay very close attention to that one or two really big points. Sometimes I would even circle a particular sentence. And then I would put a little sticky note on there saying, hey, I thought you would find this interesting, or some sort of personalization. And that personalization, guys, made it to the point where our conversion rate and our response from the direct mail was such that we didn't have to do the bulk mailings. Just like Nathan was mentioning, while everybody else is out there doing 5, 10, 15,000 pieces to get a decent response, he's doing 50 pieces, 100 pieces at the most. So when you're doing these types of things, it becomes worth your time because of the high level of response and the quality of the lead because of the fact that they're picking up the phone to call you. So just a couple of points.
Yeah, the bold. I do the bold, Chad. I do the bold on, especially, hey, to remove your mortgage insurance. Bold that, because that's hitting a pain, is having to make that mortgage insurance payment every single month. So yeah, I do bold and do some creative juices on here, and I tested it, which one works, and I added the bold, I don't know, about 3 months ago. So I don't know if that helped increase the call or what, but you do got to differentiate yourself with that mail piece from all the junk mail that they're getting, because our consumers getting immune, the homeowners getting immune to everything, because they're getting bombarded with a bunch of direct mail piece that's bulk, and they're just throwing it in the trash. So once they get the one that I've been doing, I mean, that stands out, and they're going to open it, and that's all I want them to do is, like you said earlier, just open it and call me. That's what the mail piece. You just invited yourself into their home by that mailer. Now, if they call you, that's huge. You ought to be able to close that deal.
Absolutely, absolutely. So yeah, all wonderful, wonderful points, and I know we're getting a lot of questions here, guys. Don't worry, we will answer. But let me just throw this out there too, guys, is we were just talking about addressing the barriers that will keep them from picking up that phone. What's going to stop them? So you got to sit down and actually ask yourself, why? Why would somebody read this and not pick up the phone and call me? So again, we're going to remind them that there's no obligation. We're going to remind them of the pain for staying where they're at. So we don't just list benefits, but rather we list, here's what happens, here's what's going to stay the same, and here's how much that sucks, if you just don't do anything. And then we stack, we load the benefits. We don't just throw one single benefit out there and hope that that's going to work. We put multiple benefits so that it becomes that irresistible offer. And again, it's the timing of all of this. The fact that we're in January, as we already mentioned, you're going to run into that holiday regret. They start receiving those bills in the mail, so it's going to create a firm, cold-hearted reality that, holy crap, I dropped $6,000, I only meant to spend $2,000, and now those bills have to be paid. Okay? So they're returning to their routine again, so they're getting out of holiday mode where everything's about fun, fun, fun. Or stress. And now they're returning back to their regular routine, and they're in that action phase where everybody's making their New Year's resolution, hey, I'm going to do this, I'm going to do that. So they're kind of tackling those things that they've been putting off. So we really like that. That gives you a huge opportunity that's coming up here in a little over a month.
And, Chad, as well, when the mortgage insurance that you can't write off anymore, when they go to their tax preparer and they say, well, come to the day you can't write this insurance off anymore, you're just blowing that money. So you're going to hit them right at tax season when they're going to file their taxes and they're going to be unable to write that mortgage insurance off.
Really?
Obviously, they got to talk to their tax preparer about that to make sure they can and cannot write it off. But yeah, I mean
I like
they're
that.
going to feel the pain of I'm spending $200-300 a month on mortgage insurance that I can't write off, and that letter's going to hit them at that right time, and then your call volume is going to go up.
Beautiful, beautiful. So that's all about, again, guys, giving them deadlines. I love it. I love it. So that's a brilliant one. I like that. So what do we do when the calls roll in, guys? Now, I know I've heard you on the phone, Nathan, so I know that you sound good on the phone. You know how to get that energy in your voice. And I'm going to tell you guys right now, I can't tell you, because I talk to thousands of loan officers every year. I can't tell you how many times I'm talking to loan officers. When they first pick up the phone, they don't know who I am. So it's not that people just hate when they see, oh, here comes a call from Chad Weber. When you get that, hello. There's no emotion, no happy. I mean, it's like, don't be a Grinch, you know. We got to add some excitement to your voice, because that translates over the phone. And I know that's just all basic sales 101, but guys, listen to yourself on the phone and make sure that that's not you. Because I've had a lot of people where I'm going, well, holy crap, this person must be having a bad day. When somebody's actually picked up the phone, when you drop money on a mailer, do you want that to be the first thought that rolls through their mind? Why not get a nice upbeat personality for them to listen to when they first call you for the very first time? Those first impressions are lasting impressions. Next, what I like to do is, as soon as I get that call, I'm going to immediately reaffirm the advantages. And what I mean by that is repeat some of those words and statements from the mailer. And that may sound, again, like really basic elementary stuff, but it's it's that repetition for emphasis that's flowing through their mind. So it's, oh, hey, you're the person or you're calling because I sent you the mailer on how to boom, boom, boom. And I repeat those 3 or 4 benefits that I stacked in that mailer to get them excited again, to get them thinking along the lines of stop thinking about how uncomfortable and awkward it is talking to somebody you don't know about your financial situation, and get them instead thinking about, oh, yeah, I can't wait to accomplish this or accomplish that. You know,
and Chad, just what you were saying, they don't know who we are. That's why I stick the business card in there, so they got to know, like, and trust you. And with my business card with the picture, when they call me, hopefully my picture is at least selling them a little bit. So when they do call, they know who they're at least talking to on the other end because of my picture on my business card. That's one reason why I send it as well. But like you said, you got to sound upbeat, and if they just call the toll-free 1-800 number from some other odd mail piece that's going to be in Chicago or Atlanta or New York, they're not going to know who they're talking to. Your call volume will increase, and your sales should increase if you, like you said, upbeat and reaffirm why they're calling. They say 90% of the sale is just showing up. I think 90% of the sale is just answering the phone.
Right,
10%, 10%'s up to you now to get that individual to buy from you.
Beautiful. Exactly. And you guys, you want to try something really cool. Again, it might seem like a small thing, but give this a shot. Nathan mentioned something earlier, that one of the reasons that he asked these people why are they calling, why they decide to do their loan with him. A lot of them, it's they're calling because he's local versus somebody halfway across the country. There's, again, you can play to that subconsciously by making some little comments that remind the people that you are local. So when I'm asking, oh, hey, well, what area are you calling from? Oh, I'm calling from Chester. Oh, that's just 20 minutes from me. Oh, pretty cool, pretty cool. Yeah, it's just a little off-the-hand remark, but it's just constantly reaffirming and reminding them that, hey, I'm a local guy too. And that plays to your favor. So it's, again, just these little teeny tiny things that you do. It's those small hinges swinging these big doors again. So it's tapping into the sales power of subconscious persuasion that's going to help you get the most out of these inbound calls, to where, boom, you could be like Nathan, closing 8, 10, 12 refis every single month on top of your purchases. So we're making it more real by asking them very pointed questions, not vague questions. We want to get personal to their unique circumstances. Get them talking about themselves, their favorite topic. We're also going to continue the risk mitigation by reminding them, hey, just so you know, just a reminder, you're not committed to doing anything here today, but I'm just going to ask you some pointed questions just to make sure that this is going to be beneficial for you.
Absolutely.
So in the scalability, I see a lot of you guys asking about scaling. You can add new cities, you can add new states, you can target new niches. You can even take what you're implementing here through the mailers. You can take that process online via Facebook, AdWords, Yahoo, Bing. You have all these resources that once you tap into something like this that's working so darn well, if you want to, if you have the time or if you have the support to scale, if you want to get to 15 refis a month, 20 refis a month, okay, very doable, but you need to tap into some of these scalability possibilities. So I want you guys thinking big, not small. Don't think about tossing an extra refi or two a month. Think about how can I get to 8, 10, 15 a month. Because your message doesn't change regardless of the medium. It's the medium that changes, but the message remains the same. So that scalability is there.
And all the benefits of doing this, Chad, I've also had benefits where it's amazing on how many of these first-time home buyers have their parents helping them with the purchase and with the refinance. I spoke with several parents that either want to sell their property and need a loan to go out and buy another property. So this has festered and grown into other avenues like purchase business through referrals with these mail pieces. I've gotten other referrals from these mail pieces because I ask for it. For the benefit to another client, can I be of service to their sphere of influence? So this is just not this one mail piece. This thing can grow your business with other avenues. The individual that their mom called me and they're wanting to sell their home and buy down into the beach area. Well, now I got a referral to send to a realtor partner, and I can do their loan, hopefully on their sale of the property, and do their loan when they purchase. So you're also going to get other phone calls than just that individual looking to refinance.
Right, right. Yeah, it's that snowball effect.
Absolutely, absolutely.
You get it started, and just so long as you're keeping your eyes open, you're going to find additional opportunities that just keep snowballing and branching into other areas of your business. I mean, I've gotten a lot of purchase deals off of my refi advertising. It's hilarious how it just all branches out into other areas of your business. So
absolutely.
So good stuff, really good stuff here, and I see we have a mountain of questions, but I'm about to get to these questions here, guys, so keep them coming, and we're going to start asking some of these questions directly to Nathan in just a moment. But before we get to that, I just want to answer the one big question that everybody keeps asking, and that's, hey, what's the mailer that Nathan's sending? Now, Nathan has basically extended the offer that he's going to make that exact template to the exact mail piece that's been getting him these 8 to 10 closings every single month. And so you're going to use the exact template that's already responsible for getting him those closings. He's going to throw in 4 additional variations of that template for targeting other variations and niches for growing. And you're also going to be able to download his to-do list that help you keep your refinance campaigns on track. Okay? In addition, Nathan's also offered for next week, he's going to do a live tutorial showing you exactly here is what you do to get this going in January. So this is about as close to a no-brainer as it gets because, again, this isn't me, guys. This is Nathan's special offer, $59.95, $59, guys, less than $60 to get his package. So that's 5 pre-written direct mail templates. That's his to-do list. Also his live training.
Yep.
$60. Guys, that's nuts. Absolutely nuts. So here's where you can go grab that. Now this is a special offer that we'll have up for 24 hours, like usual. It's loanofficermarketinglab.com/refi. And absolutely brilliant. So here's the thing, guys, is I know Nathan's the real deal because Nathan, boy, how long have we spent every Tuesday on the phone together?
It's been, I think it's been a year now. Every Tuesday morning at 6:30, you and I talk.
Absolutely, absolutely, like clockwork, every single Tuesday morning. So I've seen this progression and evolution happen firsthand. So $60 to get what basically the testing and tweaking over the course of an entire year to leapfrog all of that learning process, and on your live training, you're going to show everybody how to get their hands on data too, right? Some really cool resources, yes. Some of them free. You have some free resources for data, don't you?
Yes, I do. Yep.
So guys, I know everybody's just been pounding the data. Where do I get data? Well, Nathan actually has some free resources as well. Now, we had to do a little chatting to talk him into making that available because not too many people want to give up a source that powerful and valuable. But for $60 to get access to all of that. That's insanity. So I really appreciate your generosity in making this available, Nathan. And I know you've done a bang-up job in targeting the local markets and getting your phone ringing, and now showing everybody else how to do it too. Just very powerful. So
this last half of the year has just been great on it, Chad. I mean, over 20 closings, over $5 million in extra revenue that I've generated in just the last half of the year. So I'm excited going into next year because I'm going to keep implementing this. You know, keep going at it. Just rinse and repeat every single month.
Now, here's a question that I keep getting asked. Everybody wants to know, how are you finding the time to handwrite, 50 to 100 of these things in a week? If let's say you start out December and you say, okay, I want 100 pieces to go out. When are you finding the time, or how are you leveraging that? How are you making that a reality? Because I know that can be time-consuming.
Well, it takes about 100 mail pieces. It takes about 2 hours. I have an assistant that I work because I do such high volume with other avenues as well. So her and I will crank it out, or I sit on a Sunday, watch a football game, and stamp them and hand sign them, stuff them. I mean, it's a lot of work, but I work a lot too. So you got to set time to do it. But if you do 25 to 50 a week, it's not going to take you that long to do it. So you just got to be committed to it. Do the stamp one day on all the envelopes, like the return envelopes. Then you put the physical stamp on it the next day, and you just set yourself up where you have these pre-printed and letters, and all you're doing is signing and stuffing.
Right.
So
right.
you got to set some time out to do it. But the cost for an hour or two a week to send out 25 to 50, I mean, if I get paid $10 an hour working another job, and I do it for 2 hours, that's $20. I'm going to make a heck of a lot more than that once those phones starts ringing.
Right. Absolutely. Yeah, and I know that I've kind of been in that same boat. We did a lot of mailers to local realtors and FSBOs, and it got to that point where I just didn't have the time. So yeah, I mean, I just started paying somebody $10 an hour to do all that for me, to hand sign them and stuff the envelopes, so that way I could spend my time elsewhere. So as you get going, definitely something that you might do yourself in the beginning. Just until you start seeing that return on your time and money investment, and then you start outsourcing as that money starts rolling in. Now, what I think is really cool about what you do, Nathan, is we're talking these 8 to 10 refi closings each month. Refis aren't your only business. I mean, you're doing purchases, and you've had some pretty incredible elephant months with purchases too. So the fact that you're finding the time to hit both parts of the market is pretty incredible, and a testament to how time efficient this can be, if you're playing your cards right.
Oh yeah, you and I talk about, I help FSBOs, for sale by owners, market their home. I do purchases, I do refinances, so I have a system, been doing this for a long time, so my system is down where I block those times to do these things. But this has been the bulk of the business for the last 90 days, has been the refinance, and I've been catering more to that as of late, because of the return on investment has been huge, because everybody's on this holiday mode, so I dived into the refinances. Right.
Absolutely. Now, I see some questions now. The data source that you're using, the free data source, is that just California, or does that cover other markets too?
I have one. Yes, it covers some major markets where I pull the zip codes at, but I did find another source just yesterday that can go nationwide. So I got a website to pull that data as well. Yep.
Oh, nice. Yeah. Okay, perfect. Okay, and then one of the variations for the niche markets, because you're basically offering 5 different direct mail templates here. Is one of the variations, is that covering VA IRRRLs, or could you tell us more about the 5 variations and what niches that covers?
I got 5, which is the IRRRLs. The V is just strictly to the VAs. We got FHAs. We got USDA, high interest rate credit cards, or high interest rate home loans, so That's the fourth, and then I got some combo stuff, anything over 100%, such as a 203K that somebody did, maybe a home path that somebody did. So anything that's over 100% loan to value, they should, if you've done your data correctly and found what areas have grown in value, those people that did an FHA 203K, because those do bear higher interest rate and mortgage insurance, they should have that value now to get rid of that FHA 203K loan. So those are my 5 letters.
Beautiful. Beautiful. Okay, now I see another great question here. What is the date that it when you're talking about the one of the ways to get people to take action is talking to them about the deadline for when they can no longer write off that MI. When is the effective date for that?
I think it's at the end of this year. I know if you make over $110,000, you cannot write off the mortgage insurance over 110. I thought, now this is, Congress has to vote on that if they're going to allow that mortgage deduction as a tax deductible fee. And I always tell people you got to consult your CPA with that because I'm not a tax advisor.
Right.
And that's another letter that's going to go out at the beginning of the year is I am going to call when I see my CPA send out letters saying, hey, can the mortgage insurance be written off? Did they change the rules in 2014 so I can hit that other pane in beginning of the year of 2015 says, hey, you probably done your taxes and noticed you couldn't write that mortgage insurance off. This is a time to refinance. So you got to change up your call to action and your message when you send the letters out as well.
Absolutely, absolutely. And do you basically keep your mailer the same, or are you constantly changing it and making tweaks to it, from month to month, or have you kept it pretty much the same?
Well, I've tweaked it since I started doing the mailers in February, so I tweaked it towards the end of the summer, and that's when I started seeing the good results towards the end of the summer. So I'm sticking with that mailer. I do change the first paragraph to, hey, you got a high interest rate loan, or I see that you have an FHA, I see that you're on an adjustable, I noticed you did an FHA 203K. So that changes, but the rest of the body of it below that, it remains the same.
Gotcha. Okay. And earlier you mentioned that you'll purchase by the 500 envelope box, when you go to the office store, and that 500 box can last you all month, or in some cases 2 months. But what is the general cost per 500 mailers? Could you repeat that?
It's under $5. So with the stamps, the business cards, and the envelopes, it's about $295 for all of that, and because a box of envelopes is about $33. And this is all tax deductible, guys, on your 2106 expense. So you can write off the envelopes, you can write off the stamps, you can write off your business card. And that's what I like too, is I'm writing that off of my taxes, but it's going to my marketing. So that's another positive on doing the marketing. You're spending money on yourself, that's going to give you a big return.
Absolutely. So 500 mailers is costing you just under $300.
Correct.
And that 500 could keep you busy basically all month, or in some cases even up to 2 months.
Oh no, I was doing a box a week at one point. Then the holidays started coming, and the calls started coming down, and I go, well, and I've noticed throughout my years of this business that the last part of the year it's kind of tough to get people to purchase or refinance anything because of the holidays. That's their excuse. So
right.
Yeah, I mailed out a couple, about 100 and something 2 weeks ago, got some phone calls off that, and got 2 originations off that, and I'm not going to mail anything out until January. Okay,
so January is your next big mail month.
Oh yeah. I'm going to hit that tax. I'm going to hit those people that got the MI.
Gotcha. Okay. All right, so we're looking at about $300 covers 500 mailers. Okay, perfect. Now, have you ever dabbled in any other niches, reverse mortgages, anything along those lines, or?
No, because that's not my niche. Yeah, it's not our niche. Our company doesn't do those.
Okay. All right.
But that is another niche that somebody may go after. It might be a difficult one, but it's something that somebody probably can go after.
Excellent. Excellent. And now, when you're presenting, so Dave is asking, when you're presenting to these folks, so you have these calls come in, are you using something like Mortgage Coach, or are you using some sort of presentation software, or how are you converting these folks or impressing them? Is there anything that goes into that, or is it
old-fashioned selling? It's just when you pick up the phone, like you mentioned before, have a smile on your face. People do notice when you're smiling when you answer the phone. When my phone rings, that means somebody wants me for something, and 9 times out of 10, it's business. So when I pick it up, you got to have that smile, because they can feel that, and thank them for calling. When they do call in and say, hey, I got your mail piece. Thank you for giving me an opportunity, for calling me. I was sending out a bunch of them, Chad, so it was FHA, VA, so I had to kind of say, are you on a VA or are you on an FHA? And now I kind of did my VA mailer, so when they did call in, a good possibility it was from the VA, so I can hit that right at the very beginning. Oh, you got my VA mailer, great. So it was always pumping them up and giving them, that's why you called me, is because I'm the professional, put that smile on your face, and when they called you, all you're doing is you're solidifying that sale on why they should do business with you.
Right, absolutely. Now, Nate is asking, have you tested using postcards versus envelopes, and what was your experience there?
They fell victim to the circled trash can. They didn't. you spend a lot of money on that, and it used to work, but now the consumers getting inundated, homeowners, with direct mail, and it comes in all various shapes, sizes. Of direct mail. I've seen them. I've had my clients give them to me. Hey, let me look at that. And I've took some from thoughts from that mail piece and put it on my letter. But they said this stuff is junk. It goes in the mail. So no, don't waste your time on postcards or going to like best rate referral or anything like that. It's money going in the trash, guys. It does take a little bit of time to handwrite the envelopes, but your open rate is going to be tremendous compared to bulk mail pieces. I've done bulk mail pieces, and it just doesn't work.
Right. Yeah, it's that targeted approach, and in small numbers, that's where you're going to get the best bang for your buck.
Absolutely.
So, all right, so some awesome questions. Keep them coming, guys. So just a quick reminder, it's less than $60 to get 5 different templates, plus your to-do list on how to make this program work, as well as a live session with Nathan to go over what he's doing to make his big launch in January. So guys, you can time yours to launch and deploy same time as Nathan, and I already know a whole lot of people here have already jumped on board, but it's just an incredible opportunity. Good timing. Tap into the fact that this is the one time a year that you have all of these things kind of come together. So
absolutely, and it's a good time. It's a good time, Chad. It's a good time because the news is talking about the refinance market, how the rates have come down, how the values have gone up. So the homeowner is talking. I remember in 05 and 06, everybody says, "Oh my God, my house is worth $30,000." It increased just in 6 months. People are saying that now too on how much equity they have in their home, and the good part is we've had interest rates low for a very long time, below the 4s, and now they've kind of dipped down in the 4% range, 3.875 on some products like a VA IRRRL. And the VA IRRRL is streamlined to a VA interest rate reduction refinance loan. It's going to be one of the easiest refinance loans that you will come across is the IRRRL, and I love targeting those individuals. And now that our company will allow us to do other mortgages, pay those off with other lenders, I'm going to tackle that because they're easy. Beautiful.
Absolutely. So now have you tried? Actually, here's one. So Shane is asking. So what do you spend on data in conjunction with your cost of mailing, or are you primarily using the free source that you described earlier?
Well, the free sources I'm getting where I can target and mail to. I'm not doing that shotgun approach and saying, oh, give me everything in LA. I want to mail it to that meet my data criteria. I mean, that doesn't work either because you might have a zip code in LA that doesn't have Los Angeles, that doesn't have the value. Same here in Rancho. I'm not going to mail to a specific zip code. Why do that? I want to mail to the people that this data shows me that it has equity month after month of increase in equity, and that's who you want to go to. On the data with Ralph over at Black Knight Financial, he's worked out. Now you guys got to call him directly. His name is Ralph. Jay, you want me to give you the phone number over here?
Sure, sure.
His number is 951 265 3709. 3709. So 951-265-3709. His name is Ralph with Black Knight Financial. He's going to give everybody that calls him from you, Chad Weber group, he's going to give us a special discount on the data on what to pull. But make sure you get your data down so Ralph knows what to pull for you. And he's offering it to us for 15 cents per lead, or per mailer, if you want to call it.
Perfect, perfect. So that's a great deal. All right, so some folks asking for a repeat of that. That's 951-265-3709, and that's Ralph. Mm-hmm. So basically, then they have two choices. Depending on what type of mailer they want to do, there's the free resource, which you're going to share. You said you just found another one yesterday that you could tap into that works practically nationwide, right? Where you can get
and this doesn't. Yeah, well, it's free data on the value, so it's not free like here's mail to these people. It tailors down to your zip code, so like you don't have to go out and pick everything in the city of Rancho Cucamonga or Upland. I can pick those zip codes and just mail to those people in those zip codes, so I'm not mailing to a particular zip code that doesn't have any equity. Okay. So we do have that, and that I go to, so I can tailor-made my letter to that particular zip code, because I just don't want to order a bunch of data just to do that shotgun approach. I really want to narrow it down to the people that I'm going to have a good open rate, and when they open it, they're going to call me, and hopefully they have that value. I just, I want to really hone in and target that niche that I'm going after. Absolutely. Beautiful, beautiful. No, that's fantastic. So and with the Earls, with the Earls, with the Earls is open game, because you don't have to have an appraisal on an Earl, so you can mail that out into anything. FHA Streamlines, you don't have to have an appraisal on that, so you can mail that to anything. But nobody's doing Streamline FHAs anymore. It's the Earls that people are going after.
Right, right. Excellent, excellent. All right, so I'm just scrolling through here again, see if there's any questions that we missed. So let's see. Have you tried the service send out cards? Heidi is asking.
I have not, no.
Okay. All right. And Patrick is making the recommendation for the month of December, a great month to use red or green envelopes. All right.
Oh, that's good. That's
good. Holiday season.
Yes, that's good.
All right.
And it's unusual. That's good too. You got it. That's some good mentioning there, because you got to make that envelope a little unique where it's going to get opened. That's the biggest thing, is you got in the door by mailing them something. The next piece of the puzzle is they got to open it. And if they open it, then they're halfway there of calling you. Once they read that letter, you have your business card in there, they should call you. And I mean, 90% of that is almost sold just off the letter and the phone call. Now it's up to you as a sales professional is give them what they want. The professional will answer the phone right there. Right. Absolutely. Absolutely. Now, and Chad, as we're on the phone call right now, my phone is sitting with my assistant. If somebody has to go somewhere, go to the bathroom, go to lunch, give their phone or whatever the number. I put it on my cell phone, so I can, if they call me and I missed their call, I got a missed call, I can call that number back. But I give it to my processor and say, hey, I got to go to the bathroom real quick. Can you answer my phone and just ask these questions? So they have a live body that answers. I just don't leave my cell phone unattended. Right, right, exactly. Yeah, great advice, very sound advice, because those phone calls are gold. Now, I seem to remember you actually mentioning to me a couple months back that when your inbound phone calls are getting overwhelming to the point where you actually were letting other loan officers in the office take some of those deals just to take a little bit off of your plate. You had, what, about another 10 closings that basically other loan officers in the office had because you couldn't handle the inbound calls? I went to the manager and said, hey, I'm going to extend this to the branch if you want to do it, and some other loan officers did it, and they actually closed 10 refinances in the last 2 months. They didn't mail out as much as I did, but they capitalized on it as well because I just couldn't handle the phone calls. I was getting overwhelmed. I kind of kicked myself in the butt, but I had to work a heck of a lot more to get that, so they were able to at least capitalize on it as well. But we did it kind of a big mail out, but individuals don't need to do that. Stay real close to your home office and you will see your call go up. And we mailed out throughout Southern California and got a great response.
Beautiful, beautiful. Now we also see here, can I use, okay, regular stamps. So Robert is asking about regular stamps that his company pays for postage, but they only pay for it if it's using their, I guess, meter machine or postage machine. What are your recommendations for a loan officer that finds him or herself in that situation?
Well, I don't do anything metered. I mean, the first thing we look at when I get a mail piece is, oh, is this metered? And it might not get opened. So I spend the money on the stamps. I get to write it off on my taxes. So for me, it's a benefit when I do my taxes at the end of the year. But you got to ask yourself as an individual, do you open up metered mail or do you open up a mail that has a stamp on it? Which one would you open? And I don't have a meter at the office, and I wouldn't use it even if I did. It's the stamp that helps that open rate. So I put a stamp on everything. I go to the post office and buy the rolls of stamps and slap it on there. It just works the best.
Right, right. Excellent, excellent. Okay, makes sense. Perfect. So what we got here, yeah, it's definitely worth the investment for the stamps, guys. I mean, I've done both back to back. The amount of money that you save by having your company either pay for the metered mail or just the discount for using a machine like that, it doesn't pay off. The difference in conversion rate from actual stamps versus the metered mail, just not ideal. It's not a good trade-off. So
the bulk mail doesn't. I mean, I get it. My consumer calls me, and I look at the bulk mail, and they're not offering much in that bulk mail. And like I said, other companies are doing a bunch of bulk mail, and the consumer's just throwing those in the trash now. So I got to compete with that bulk mail. And the only way to compete is, do you do the bulk mail and hopefully you get open, which I don't think you will, is you got to make it look different. The colored envelopes, the green and the red for Christmas, great idea. Maybe you make them a different color when you mail them out. I haven't tried that. It's just I stayed with white number 10 envelopes. That's just what I did, and it's working. So, and anybody that's listening, I mean, you can test. It's all about testing. Nothing's perfect when you're marketing because you got to move with what the market moves. And
right.
The number 10,
right.
It just works for me.
Absolutely, absolutely. And now you also mentioned the Haynes directory. What's the difference between Black Knight and the Haynes directory? What's the primary difference there between those two?
It depends on how much data you get. If you're getting a lot of data, the Haynes will cost-wise will work out better for you in those 10 cities. Now, Missouri, where you're at, Chad, it's one of the cities. They're not in Texas. They're not in Florida. They're not in North Carolina, South Carolina. I mean, they're only limited to 10 cities. So if you're in one of those 10 cities, you might want to have that as a backup. They're very affordable as well per the year. So they do a month-to-month contract. It's just how much data do you want to pull. If you're not pulling 6,000 records a month, then the Black Knight's good. If you're pulling over 6,000, then the Haynes might work better for you because of the cost.
Right.
And guys, I'm not overthinking this. I've tested some things. I'm not trying to get fancy with this. This is, I created a letter. It's working. I tweaked it. I got my letter approved by my company, so it meets all the CFPB guidelines and all that kind of stuff. So I just didn't go cowboy this thing out and mail it. It did get approved by my company on the letter, so I do stay in compliance. And I'm not overthinking this mail piece. It's just I looked at it and said, how can we make this different and get it opened? And this is what has been working for me.
Right, right. Absolutely. Absolutely. Now, here's somebody asking about what are you putting for the return address? It's your company name and address, but it's stamped, right?
Yes, I went to Vistaprint and just bought it for $15. So it says my company name and my address and my city, and has my company logo on the side. I mean, I got a little fancy on that, but the logo didn't come out that good. So I mean, that was an extra cost. So I'm sure the stamp might cost $12, but it's a great investment to just stamp it. I didn't buy a label maker or anything like that. It's just one of those ink thing that you stamp on the return envelope.
Right. Okay, perfect. And then let's see. Okay, I'll see some of you guys. If you already purchased the templates, and if the page should have redirected you, it's PayPal. So if PayPal did not redirect you to the actual page with your downloads, just shoot a quick email, and as soon as this call is done, we'll make sure that it's re-emailed to you so that you can immediately go in and download. Okay, I apologize. I know sometimes PayPal's a little flaky. They're kind of like the go-to webinar of the merchant account world. So yeah, if it's giving you any trouble, just shoot a quick email to the cweber@averagejoe.lo. Just say, hey, please send. We'll get that out to you immediately. All right. So I see another question here. Says Aaron has two questions. He says, when you're referring to the FHA, are you referring to converting from FHA to conventional? Is that
Correct.
One of the niches that you're targeting? Okay.
Yeah, FHA to conventional.
Okay.
And that's twofold. So you got a letter that says, hey, because you can in the data with Ralph ask him, I want all the deeds of trust with FHA that were recorded after June 3rd of last year, so you can tailor and say, hey, you got in your case number, FHA case number was probably established after June 3rd. That mortgage insurance is going to stay through the life of the loan.
Right.
So that's one. And then prior to June 3rd, I mean, there's another slight mail piece where it says, hey, you got FHA mortgage insurance you'd like to get rid of.
Right. Absolutely. Okay, and I see here, okay, I just sent that out. Okay, just scrolling through here, guys. Give me just a moment. Okay, so Patrick's sharing that he's, I'm sorry, go ahead.
It's just I mean, you should add, and Chad, you always talk about pillars. You should have several pillars in your arsenal on how you get business. This is going to be in my pillar as one of my weapons to drive business to me is refinances, and you just got to tweak it and with the data, find the areas that have the values, and then mail to them locally.
Absolutely. Beautiful. Okay, and Heidi is asking, have you ever used for a data source, I think that's, what is that, reisource.com?
I did hear that. You got to pay for that. So no, I don't pay for any of the. I pay for the data from Ralph, but we don't pay for any data where I find the zip codes. No, that's all free. But I heard of that. I heard of it, but you do got to pay for that.
And I'm having a few folks ask, with the return address, have you ever tested for that return address actually hand filling that out, or is there a reason that you're using the stamp versus handwriting that as well? If you're I've mailed out a lot, so to handwrite the envelope and the return, which probably work as well, it comes down to time. Okay. It comes down to time. Yeah. Okay, so that's maybe one of those things that if you're outsourcing and paying somebody to do it, it might be a good idea to just kind of throw that in there as a test and see if you're getting better results with the handwritten return address versus the stamp.
Exactly. So, yeah.
Okay. Awesome. And let's see. Okay, so all right. So Aaron's calling me out here. He said he had two questions, not just one. All right. So Aaron's second question is: do you have any future templates or anything that you've been testing recently that they would also get access to?
Yeah, I'm gonna redo the one when it comes tax season for the individuals, and I'm definitely gonna talk to a CPA and find out is that mortgage insurance tax deductible or not, or if it's not, and that's going to be one of my bullet points in my letter to say, you paid your taxes. Were you able to write that mortgage insurance off? It's just going to be one of those pain points there that people are going to call me. So I'm going to switch up that one. And as I increase my niches of market, then yeah, I'll create different kind of letters. But for right now, I've just been tackling those 5 particular niches. But then when it comes January, I am going to create another letter for those tax deductions. Awesome.
Now, Heidi threw something out there. She said with the REI, for data that it's actually very, very cost effective, and that you can actually get an account through First American Title. So she's vouching for our EI as being a decent source as well. Okay, let's see. Use the template.
Now the biggest one, Chad, too, that people may want to target is, we all know coming up in 05 and 06, 10 years from now, we're hitting our 10-year mark of those lines of credits resetting. That might be another data you can talk with Ralph with first and seconds. Hey, your second mortgage is about to recast to a principal and interest payment. Refinance before it does that. I mean, that's another market that I have not hit yet. I mean, that's something I'm looking into next year.
So there's a lot of untapped potential still out there.
Oh, definitely.
Yeah, absolutely, absolutely. So I like that, the targeted mailings. I mean, I can vouch for that, guys. Been there, done that too. It works much better than bulk drops, those big expensive bulk drops, and it can be used. The skills are transferable to other areas as well. For sale by owners, even direct mail to realtors. When you're wanting to target those elephant agents to get you to call you back and get an opportunity to pitch them for business, direct mail works wonders. So definitely there's
absolutely. And I think we went away from it as an industry, as individuals. We just didn't do it as much as we should have, and that's why I went back to it, because I saw the business from the purchases, Chad, go away a little bit at last year in 2013. So yeah, I got to move. I can't just wait for business to walk into my front door, and whatever purchase and refinance business walks in the front door of a mortgage company, it's just non-existent. So you gotta shift with the market, and the refinance has done that for me this year.
Gotcha. Okay, awesome. And have you tried for when individuals are calling you, are they dialing your direct number, or are you giving out like an 800 number or a call capture hotline, or what are you giving out for?
My cell phone.
Call you.
My cell phone.
Okay, so they're getting you direct.
Yes.
Excellent.
Yep. I'm throwing my business card in there, and my business card has the office number, so if they call the office number, but on the letter and I think on my business card, the first number is my cell phone, so I want them to call that cell phone because somebody should be answering it, and if they do call my cell phone and I got a missed call, I return those missed calls. I don't want to miss an opportunity, so if they don't leave a message, I do return that missed call back.
Awesome. All right, so all very, very good advice. Very good advice. And then again, if anybody needs us to resend, if for whatever reason, if your screen did not redirect, just shoot that out to cweber@averagejoelo.com, and I'll have that the downloads re-emailed to you right away. Okay, so here's that link one more time, loanofficermarketinglab.com/refi. So you got to get that /refi in there, guys. loanofficermarketinglab.com/refi. It's good for 24 hours, special offer, and that'll get you those 5 templates, plus the to-do list, plus access to next week's live training directly with Nathan, so you can get your first campaign ready to rock and roll and hit the ground running. So I thank all of you guys for your awesome questions. So if I missed your question, or if you have a question for myself or Nathan, let us know. And here's somebody vouching for you, Nathan. So Joel is saying Nathan is the real deal. I have friends that work at his company, and I know him. His numbers are for real. So
thank you, Joel. Thank you, Joel. I appreciate that.
So he knows you're hitting that that top performer list repeatedly. So I can vouch for that as well. All right.
Well, thank you for everybody for attending, and hope to see you there. It's just one of those pillars we need to put back into our business model is refinance. We should never get away from it. We just got to move with when the market moves with the refis. Absolutely,
absolutely. We never want to put all of our eggs in one basket. Having the capability to land those quick closings, again, like we were talking at the beginning, it's beautiful to have access to something that, hey, you can see this thing closing in just a couple of weeks and keep moving on and keep moving forward. So it's creating that assembly line and having those multiple pillars of business, both refi and purchase, regardless of market conditions, is definitely a great skill to have, and gives you that security. So and just a couple quick last questions. So Patrick, Chet, is that template editable? Absolutely, absolutely. It's a Word document, so you can go in and change that or make any changes, and that would be a great opportunity to be on the call next week with Nathan. And guys, when you make that purchase, keep in mind you're not having to pay for that call next week. That's something that anybody that's purchased the $60 package today, you get access to that live training next week. Feel free to bring your questions. We could talk about editing. We could talk about timing. We could talk about data sources. You know, it's just going to be a very powerful call to really turn this thing up. So.
Like it.
All right. So any closing costs or closing comments?
Closing costs. Rolled into the loan, Chad.
Yeah, you know, it's stuck on my mind.
Roll them into the loan.
So, yeah, there you go. All right. So the live training, yes. All right, guys. So, yeah, I got to hop on my next call here. So, again, thank you guys very much for joining us, and thanks again, Nathan, for all you shared. I hope you guys got some wonderful, amazing ideas from all the knowledge that Nathan dropped on us today, and we look forward to seeing you guys next time. There's the link. I'll leave that up on the screen for a couple more seconds. In the meantime, you guys have an awesome rest of the week. Enjoy your holiday, relax, recharge, have a great time, and we'll see you next week to kick this thing into next year. All right.
All right,
Have a good one, guys. Thanks, Nathan.
Bye-bye.
Bye
Bye-bye.
now.